Welcome to Macquarie's Prime Analytics. In this video, we're going to talk about the company Volvo. Thereafter, we'll conduct technical analysis on the stock, and then we will see if we should invest in the company. The Volvo Group is one of the world's leading manufacturers of trucks, buses, construction equipment, as well as marine and industrial engines. With its headquarters in Gothenburg, Sweden, the group employs 100,000 people, has production facilities in 18 countries and sells its products in more than 190 markets. The reason why I chose the company is because I conceive the company as a high-quality company with competitive products, world-class services, strong positions globally, and strong brands. Here you can see two similar graphs where one candlestick represents one day. It can be clearly seen that the stock of the price of Volvo, has a high positive correlation with OMX 30, with the Swedish stock market. It can also be seen that the price of the stock has a strong positive trend, creating higher tops and higher bottoms. Additionally, it has established a strong support line. It is over the Ichimoku cloud and generally over the parabolic saw if we do not take into account the corrections. So in light of the above, the price of the stock has established a very strong upward trend, and as the most investors tend to say, that the trend is your friend, and this is the first indication why you should go into the company. By looking at the indicators, I would say that there is a divergence that has been established in RSI, a very strong divergence actually, which is a positive sign that the stock of the price will continue to increase. If we're looking at the volume indicators, it can be also seen that OBV, one of the volume indicators, has a strong positive trend. If we're looking at the checking money flow, it broke the resistance line on the indicator and heading upwards, which means that there is more money flowing into the company. And the more money flowing into the company, it consequently leads to an increase in the stock price. There are some scenarios that I would like to shed light upon. And the first one is that the price of the stock will decrease and touch the support line, or it will touch the middle line of Bollinger Bands. Thereafter, it will increase to the levels of 167.72, and I believe it will break this level based on the factors that I mentioned previously. Also, it creates what we call the triangle formation. After breaking this level, it will increase to 175. Thereafter, it will have a correction touching the support line, and I believe it will increase even further. Another scenario that it will continue to increase without creating what we call correction. However, do not neglect the risks that can occur. Maybe the second wave of the COVID-19 can pop out, or something can happen to the company. So in the case of breaking the support line, we will have a stop loss on 158. If it breaks the level of 158, we should sell the stock because it will decrease to 150. But again, the first scenario has the most likelihood, and this is the price scenario has the lowest likelihood. So I believe that it will increase, but do not neglect the risks.